All right, I'm here with Dara Albright at Crowd Invest Summit. Looking forward to this interview.
Me too.
First question I have for you is, what are you doing here?
Okay, well, first I'm here. I'm speaking on a panel later today at 3 o'clock in the afternoon, sort of talking about this new modern path of capital formation that's really been created through technology and new legislation that we call fintech and regtech. And essentially, it used to be it used to be for people to raise capital, entrepreneurs. They create this widget, or they invent a new product, and it used to be that they didn't have their own money to maybe borrow from family, friends, or take off their credit card. What's the traditional path of, that they would take to access capital? Well, they would try to do some angel investing, go to venture capitalists, then hope to one day take that company public with like a Goldman Sachs or major investment bank. That is a success story that really happens for maybe less than 1% of companies and innovators and for entrepreneurs. It's been really challenging for entrepreneurs and visionaries to actually create, to access the capital to create their product. So what's happening now is that because of technology, what's happening, especially in social media and bringing people together, communications online, and some of the new regulations that are opening up investing to more and more investors, there's really a new path of capital formation that these entrepreneurs could take. So what they could do now is they could go to, let's say I'm inventing a new widget, and even if I don't know if this widget is going to be, it could be the next Apple, or it could be like, the next big bus that, something that nobody ever would want. How am I going to, know that? It used to be that you would go out, raise capital, and those first investors would take a tremendous risk. Now people can actually, an inventor can actually go out, raise their initial round of capital through like a Kickstarter or an Indiegogo, and it's really used that to kind of test out their product. Yeah, it's gauge market demand. It's really more of test marketing. Now let's say that they do that, and let's say it's a complete failure. Then they have an opportunity to actually go back to the drawing board. Maybe they need to perfect the product, or let's say it's a huge success. Let's say they have a really successful Kickstarter and they see that people really want this product. Well, now they have an opportunity to go to the next level at some point, and actually go raise a more formal round of capital. And when they do that, they could use some of this new legislation, this new crowd finance legislation that we call RegTech, some of these new exemptions like through the Jobs Act, Reg A Plus or the new Reg CF, and do a more formal capital round. And they have the opportunity to then start converting those consumers that they've got from their initial rewards-based campaign, start converting them and their consumers into actual investors. So what really is going to happen is that a company has this new way, this new path of raising capital in a much more efficient manner. And each time they raise a bigger round, and they're able to raise more and more money through some of these newer legislations, they're going back to really their fan base or their
creating a movement.
And what they're actually doing is, along the way, along this path, they're building their brand. They're getting incredible amount of marketing value out of doing it this way, especially from using the World Wide Web to get their product out there. And they, and as they do that, they could go, this is a much more efficient way. Ultimately, maybe that product, does go public. Maybe they ultimately do a small, an IPO, and go public on New York Stock Exchange or NASDAQ, at that point you really don't need a Goldman Sachs because they already have their own, they have a massive, by that point, customer base. It's not like just a handful of VCs, and you need, at that point, one or two investment bankers to get to their distribution channels. They've already, built that through this process. So I think what this is eventually going to do is breed more productive and efficient companies and economies, and I think it's the future of finance. So we're going to talk about that.
Yeah, and it almost seems like there's a lot of checkpoints along the process where you almost level up as a company.
Exactly.
So to a certain point, you grow.
Exactly.
With that being said, you covered the Jobs Act pretty early on, and were really instrumental in that coverage. Can you talk about that process a little bit?
Sure.
Being on the front burner.
Right, sure. Well, it was interesting for me what had happened. I was, at the time, I had reconnected with an old colleague of mine that I used to work with on Wall Street, who was one of the first internet analysts on Wall Street. And we connected on Facebook, so through social media, and she reached out to me and said, what do you make of these new venture exchanges like Shares Post and Second Market facilitating these secondary transactions in shares of like Facebook and Twitter? And at the time, Facebook and Twitter were private, so but these new markets were being created on these venture exchanges for them. And I started looking at that, and I said, "This is really fascinating, really fascinating." I said, I started seeing a lot of parallels between the way NASDAQ had emerged, 40 years earlier, and what was happening now. And I said, this is really interesting stuff. And I came up with this hypothesis that it's been invention and mass communications. It's been the impetus for stock market growth and economic prosperity throughout the last 100 years. So radio inspired the bull market in the 20s, and the television, the next bull market, 47 to 57, internet 1.0 in the 90s. And each one, really what it boiled down to was each new medium created a more meaningful and dynamic way for brands to interact with consumers. And when consumers were more engaged and they were spending and they were buying, and at that time, when they're doing that, the revenues are growing, stocks are going up, and economies are flourishing. So I started kind of working on that hypothesis, and at the time, I started realizing I wasn't getting my ideas for products anymore from a radio jingle or a television ad or a banner ad on the internet, but I really was getting my ideas from my friends on Facebook. And I started saying, social media is a game changer. But then I started realizing, unlike when the radio came of age, the television and the internet 1.0, they all came of age at a time when banks were lending and when the people's capital had the ability to actually fund the innovation of the day, because at that time companies would go public very early on in their life cycle. So, the people's capital would be able to fund the innovation of the day. The firm I work for, Entrepreneurship, they took Intel public in 1971. They took Intel public at a $58 million valuation. They raising $8 million on its IPO. The people that invested in Intel, and it just could have been you and me, anyone on its IPO, back at that time and have held it till now, would have realized a 200,000+% return. And then you start looking at companies today that don't go public till they're, billions and billions in market capitalization. I actually did a cool chart comparing Intel to the Alibaba IPO. And, Alibaba goes public at, they raised $25 billion on there. Crazy valuation. In order for Alibaba's IPO investors to realize the same return as Intel's did in 1971, Alibaba will need to be trading at a $480 trillion market capitalization, which is 6 times the entire
market.
It's 6 times the GDP of the entire globe.
Wow.
The planet. So, there's something wrong here. So,
it doesn't add up.
Right, it doesn't add up. So you started kind of looking, and so I just started sort of writing about this stuff and taking the message out on the road. I started a blog and then just started taking the message on the road and started doing these little events. where like-minded people would kind of get together and discuss, like, how do we fix our markets? We realized they were really dysfunctional. And then at the time, this was in mid 2011, and at that time there was a new bundle of bills that were being tossed around the House Financial Services Committee. One of them was the Crowdfund Act, Congressman McHenry's Crowdfund Act, and I wrote an article. They had just passed the House Financial Services Committee in October 2011, so I wrote an article called "Bipartisanship Prevails for Job Creation." And in it, I talk about this concept of crowdfunding and equity crowdfunding. It said this is a game changer. This is just a complete game changer. I sent the article to Congressman McHenry. He liked the article, and he was gracious enough to agree to headline an event I was putting together in New York in January 2012, which became the very first crowdfunding conference in the country.
What was that called?
It was just, I think it was called Transforming Wall Street or something like that. But you could tell it was January 23rd, 2012, and you could tell just by the excitement and energy in the room that people knew something was happening on Wall Street, something significant. We couldn't really pinpoint it, but something was changing, and people were really energized about it. I mean, truly, it was standing room only from the first presentation to like the minute the last piece of broccoli was picked off the crudité at the cocktail hour. So people were really excited, but this was even before the Jobs Act even passed. So then, we started taking this whole concept and this whole, discussion out on the road. Came to LA. The next event we did in March of 2012 actually happened to have been the very day that the Senate then passed the Jobs Act, but still wasn't signed into law. Then the next one we did was in April, which was in San Fran and Palo Alto. Did two events there. Actually had the CEO of Pebble Watch come in and talk about Pebble, and it was actually the day it happened. It was May 2012. Actually, the day that Pebble Watch crossed the $10 million threshold on Kickstarter, and they closed down the campaign. So we started getting a lot of traction, and then ultimately the Jobs Act was signed in April of 2012, and just really kept kind of writing about it, putting on these events, evolving it, and now it's just incredible where the whole industry has come in just 4 short years. I mean, it's really amazing.
And that was going to be my next question. Youngry, we raised money through equity crowdfunding.
Oh, you did? Oh, okay.
$67,000, roughly 2.5%.
On what platform did you do?
Republic off of AngelList.
Oh, okay, great.
So we did that, and that was my first experience with equity crowdfunding. And that's the first time when I joined the campaign that I've ever heard of it. And that was 4 years later, in 2016. Indiegogo just came out and said that they're also
right.
Where do you see the industry going? From how much momentum it's gained so recently, just the last couple of months?
So I think it's going to take a while to really explode, but I think we're really starting to see the equity side of this industry becoming more energized. What's really interesting, and I love that Indiegogo has made the move to the equity side. In fact, we had Indiegogo's CEO Danae. She actually spoke at that event that I did in San Fran in May 2012. I think that we're at a really incredible moment for this. I think that it's in its total infancy. The equity crowdfunding is in its infancy. But if you think about it, online investing is nothing new. I mean, we've been trying to do this or starting to do this since the internet emerged in the 1990s. There was a company, Wood Capital, that was in the mid-1990s that put together the first internet IPO. Online investing is nothing new. I mean, it's been happening for decades now. Since the emergence of the internet in the 90s, a company, Wood Capital, came along and did the first ever internet IPO in the mid-90s for a beer company, by the way, which crowdfunding, everything comes back to beer. I can get to that in a second. But the interesting thing is what's happening now that I think is the game changer is that where technology has come so far and communications has evolved so much that we are now able to allow retail investors or the masses, the opportunity to participate in equity crowdfunding or these equity deals in such tiny increments. It's now affordable where someone could actually, take $25 and invest into, put their money into an equity crowdfunding campaign, or they could take, $1,000 and diversify that across, 100 different, right. So, and I think that's the game changer because, I think the real, even when we first started, doing equity investing online, no one is going to take, their entire, no one's going to take $50,000 and put it into one deal. No one ever, now we have the ability, but that's what made, mutual funds so exciting that people were properly diversified. Now we have an opportunity for people, because of technology, to actually spread their money across all of these different types of venture deals. Maybe, probably 99% will fail, but one may hit.
And imagine you have the 1% in Google.
Right, exactly. So now, I think that's a game changer because that mitigates a lot of the risk. The fact that we have rewards-based crowdfunding for companies to start out to retest the market, that mitigates some risk. So with all of these new tools, everything that we have now that's mitigating the risk, we really are seeing a completely modern era for investing and for retail investors. So now is, with the new legislation, with the new technologies, they really have more of an ability to do this in I think, a more meaningful and a proper way, that they can really properly diversify their portfolio. That's where I think that's a game changer now compared to where we had before. So now, but it's still, I think people need to know about it. And, that I think is the key thing now is still education. People need to understand. And that's starting and that's happening a lot. And it's just like events like this.
Yeah, this is really where it starts.
This is great. I was thrilled when I heard about this event, the guys putting this together, because this is really the first, I think, event in the industry that took it to that next level where you're really starting to engage the retail investor to kind of show them what's going on. So I think they did a really brilliant job of bringing in, a lot of companies here that are actually doing campaigns, through equities crowdfunding, having, incredible speakers, like Robert from Shark Tank, and James. Exactly. James, I'm a huge fan of James. I mean, he's just amazing. So I think, this was really a great way, I think, of really starting to engage, and I don't even call them even retail. I think that we're seeing the renaissance of the retail investor, but I don't even call them retail investors. I just think now what's happening is that it's consumers. I mean, I think consumers are social media has created a way for consumers to become brands and brands to become consumers, and now for both brands and consumers to be investors. And I think it's a game changer. I think it's a whole new economy.
I completely understand. And it really paints a picture for where it's going. My question to you is, how did you first get started in entrepreneurship? But before you get into that, I want to know the beer story. So how does it all come back to beer?
So it all comes back to beer. So with capital...
This is crowdfunding, all comes back to beer.
Everything. Okay. All comes back to beer. So with capital, did the first online IPO in the mid-90s for a company with beer. Okay, that was the first IPO. It was a company called Spring Street Brewery, which made wood beer. So that, and then that morphed into with capital, so it came down to beer. It comes down to beer. There was a company, a beer company. It's a popular beer company. I can't think of the name right now, but it was a company that was looking. It was a beer company that was looking to be acquired. And they, two marketing guys, and I kind of I envision it. This is like sort of in my head.
I want to see your scenario.
So I see the two marketing guys, kind of, drinking the beer, Pabst. That's
Pabst Blue Ribbon.
Right, Pabst Blue Ribbon. So I picture, the two guys sitting there, chugging down beer, getting wasted and saying, let's buy it. Let's buy a beer company. Let's start, and that's what they did. They actually went online. They did buyabeer.com. And they realized they raised like hundreds of $millions to buy this beer company, and then the SEC came along and shut them down and said that's completely illegal.
Can't do that.
Can't do that. But Congressman McHenry, and there's actually, you could Google Congressman McHenry and Pabst beer. There's actually a great shot of Congressman McHenry holding. So Congressman McHenry said, why is that illegal? Why is that illegal? And he wrote the original crowdfunding bill. So, and you go back to online, WIT. There was another beer company too that did something very innovative in the finance space. It all comes back to beer. If you want to do anything innovative in finance, start with beer. Start drinking it and then start using it to raise capital.
That's the best advice
That's
I think
the best
we've gotten
advice.
so far. Hey, start with beer.
Don't come back to beer. I don't even like beer.
So
I like wine. I like saying, let's start something new. Let's start this whole new thing with wine.
Start with wine. To go back, how did you get started? Was it with beer and entrepreneurship, or was it with wine?
No alcohol. My background is really traditional Wall Street background. I actually come out of Underberg Tobin. That's the firm that brought Intel public in '71. Obviously, I wasn't there in '71 because much later. I came in the '90s. I'm not that old. I was part of the ecosystem working at Entrepreneurship at the time, and it was really just such a privilege working for them to be part of that ecosystem, helping the people's capital really capitalize and finance the innovation of the day, which was all these new companies emerging out of the internet, the original days. So that was really my first opportunity to understand really how the whole new issue IPO market works. And my goal was in the marketing side, so I would put together what's called a roadshow when you take company public. It was kind of before you had the internet, you could actually advertise deals. Now with the new legislation on the internet, you had to actually take companies on what's called the dog and pony, and you would take them to different investors and pitch the deal. Right, and it's still the standard today. In fact, I'm writing a book about this now. I work for the guy that actually invented the IPO roadshow. He was the one that created the whole marketing, so I really learned from the best. And so I kind of always understood just the whole element of really marketing deals and deal marketing. Where I sort of got into this was back first time I put on my entrepreneurial hat was actually in the late '90s. I was inspired in large part by WIT Capital, WIT Beer, there online. I said, this is fascinating. And I was at the time, I was doing a lot of investor relations work, and I would come home during the day and I would start trading my own account and online. Open up an online account. And how I used to trade, I used to like to trade by when companies were out there at that time in the '90s, when companies were out there going on the road speaking at a conference. Anytime they would speak at a conference, typically, it was like a 90-somewhat% chance that after they finished that meeting, the stock would go up. Because they wouldn't go on the road to talk about bad news, and that's when the markets were extremely bullish. So, and it came, I actually, when I was at Underberg, we did the first ever space and satellite conference in Wall Street. And the idea came to me was that our first speaker was a company called Youngry Radio, which was later bought by now Sirius FM. But that company went and spoke. He was the first speaker. And after he spoke, at that time, this was 1996, even before everyone really had the mass use of cell phones. But we were at the Grand Hyatt Hotel in New York. He spoke, and as soon as he finished his presentation, all the portfolio managers ran to the payphones to buy the stock, and we watched the stock rise from the Photron machine we had there. I said, this is brilliant. So I started trying you could get the Wall Street Calendar. It was a paper subscription. But you know, you have to call up every syndicate or investor relations firm, you know, and find out when their company is going out on the road or speaking at a conference. I get the conference schedules, and I used to place, you know, buy stocks before they spoke at a conference, and that's how I started. And I said, you know what? We need to take this information to the retail investor. Just put it online, because this is how I was trading, and now all these new people have the ability to do online trading, but they didn't have access to this information. So my idea was to create a Wall Street Calendar to bring this information to the masses.
So to disseminate
Exactly. So that was that was my first time putting on my entrepreneurial hat. I was 28 years old.
That's how it started happening.
It started happening, and it was right before the .com bubble burst. So then lost everything. But it was a great experience. It was a great experience.
So the last question I'd love to ask is, what is your best piece of advice in 15 seconds for the entrepreneurs out there that might be turning into an
Oh, go for it. Just can I curse?
Yes.
Because I bet James. Did James curse on it?
Did probably for 15 minutes.
Okay. So it's just fucking go for it.
Love it.
Because honestly, that is the best piece of advice. Because the worst thing you could do is fail, and if you fail, that's the best thing you could ever do, because that just makes you better for the next time. So just go for it.
Thank you so much for your time. Great
This
to
is
meet
fun.
you.